Today's story focuses on the recent market turmoil sparked by China's latest retaliatory actions against tariffs originally imposed during Trump's presidency. In recent sessions, we've observed a significant dip in stock markets worldwide, highlighting investor anxiety and the unpredictable nature of international trade policies. This video will guide you through the background of these trade disputes, examine the immediate market reactions, and discuss the potential long-term economic implications. We'll also share expert insights and forecasts, ensuring you have a well-rounded understanding of the current scenario. During Trump's presidency, a series of tariffs were imposed on Chinese imports, aiming to protect American industries and reduce the trade deficit. While these tariffs sparked widespread debate and controversy, they laid the groundwork for an escalating trade conflict. Now, China has launched a series of countermeasures by targeting specific American products and industries, a move interpreted as both economic and political retaliation. This response is part of a broader strategy to challenge U.S. trade policies and rebalance economic power. The historical context of these tariffs, their political underpinnings, and the strategic importance of China's retaliation are crucial for understanding today's market dynamics. The immediate fallout from China's latest retaliatory measures has been a pronounced drop in global stock indices. Investors are reacting swiftly as uncertainty surges across financial markets. The decline is reflective of broader concerns about the stability of international trade relationships and the potential for further escalation. Market volatility has been amplified by rumors of additional economic measures, stirring anxiety among traders and institutional investors alike. The ripple effects on commodity markets, and the sudden shift in investor sentiment. By comparing recent market trends with historical responses to geopolitical tensions, we can better understand the rapid decline and gauge the possibility of a prolonged downturn. China's retaliatory action against tariffs carries broader implications beyond immediate market reactions. Economically, the trade dispute threatens to disrupt global supply chains, increasing costs for manufacturers and consumers alike. Nations interconnected by trade may face challenges such as reduced export revenues and inflationary pressures. Additionally, the diplomatic strains could lead to uncertainty in international policymaking, affecting everything from commodity prices to currency stability. Businesses across sectors are now re-evaluating risk exposure and investment strategies. As countries brace for potential spillover effects, economic policymakers and global institutions are closely monitoring the situation to mitigate adverse impacts. The unfolding scenario underscores the delicate balance between political maneuvers and economic stability in today's interconnected world. Leading economists and market analysts are weighing in on the potential outcomes of this escalating trade conflict. Many suggest that China's retaliatory actions may be a strategic effort to recalibrate global trade dynamics rather than a precursor to a full-blown economic war. However, the immediate market response indicates that investor confidence has taken a hit. Experts forecast that while the short-term effects may be severe, long-term implications will depend on the political willingness to negotiate and resolve disputes. There is also discussion on how emerging technologies and shifts in manufacturing bases could mitigate the impact. As financial institutions brace for volatility, analysts emphasize the importance of diversification and caution. This section combines quantitative data with qualitative insights, providing a balanced forecast of what lies ahead for global markets. In summary, the recent drop in stocks following China's retaliatory measures against tariffs underscores the fragility of our global economic landscape. The interplay between political strategy and economic policy is more apparent than ever. While the immediate impact has stirred significant market anxiety, there is cautious optimism among experts that diplomatic negotiations may pave the way for stabilization. As we continue to monitor this developing story, we invite you to reflect on how these international tensions might influence your financial decisions and outlook on global trade. What are your thoughts on the balance between political leverage and economic stability? Share your opinions in the comments below. We'd love to hear your insights and experiences on navigating such unpredictable times.